So a new photo on the front of this presentation today. This is the access road to the mine at Minelandia. It's about 22 meters across. You can see a big 18-wheeler in the distance and about 700 meters long. We're commencing this site preparation at the moment on the project. So we're really advancing through the development stage of building a new gold mine, the Landia project, Nicaragua. So the strategy of the company is to construct and operate a base case 2,300 tons a day processing plant to produce 80 to 100,000 ounces of gold a year, and to double our ounces to 5 million ounces of gold and show a major gold district. Looking through the sort of investment highlights, we have 2.4 million ounces of gold, and half of that's open pittable and half's underground. The open pit portion we have fully permitted, and this is 1.12 million ounces, the second point here, of open pit materials permitted for extraction. That's taken a number of years to actually do, but we have all the permits to construct the mine, operate the mine, and extract this gold. And we can make that a little bit bigger should we permit the underground. We have another 1 million ounces of gold sitting underneath these pits, and to my mind, that's a foregone conclusion that that can get permitted. We have district scale potential of 5 million ounces, which I'll come on to. We're valued at about less than 2% of the gold price at $35 an ounce of gold in the ground, or you can buy an ounce of gold for $1,800 as of yesterday. We have low all-in sustaining cash costs of $690, a bit of cash in the bank at the end of the first quarter. You can see almost $10 million, undervalued on price to book ratios, and that's the quick highlights. So we're in Nicaragua. Gold's the biggest export. I've been operating, I first went 15 years ago, and I've been operating there 10 years full time. There are 3 commercial mines. It's a very fair mining regime. And then we can go in and see, we've met the minister on my last visit a couple of months ago. I was there the first week of June. We've got great infrastructure up to the project as well. We're on what's called a low sulfidation epithermal vein system. And if we're in a former mine, that always helps. All these deposits that you can see, there are 7 of them that make up the 2.4 million ounces, can be expanded along the strike of the veins or down dip of the veins. And importantly, we've got these permits. The community are very keen to see a new mine put up to return the village and the community to its former glory days when it was a producing mine in that area. This is Landia vein. There's 1.3 million ounces of gold here. The top 900,000 ounces is open pit, and that contains the reserve that we've got, which is that 6.9 million tons at 3 grams for 675,000 ounces of gold. So you're looking over a couple of $1 billion there, in situ gold in the ground just on this vein. This is a fault that runs up the valley, and the gold-bearing fluids come through the fault. This is a cross-section showing a slice of the vein with drilling. We have over 80,000 meters of drilling on Landia project, and about 40,000 in this main pit I just showed you the photo of. And there's some super high-grade intercepts that we've got here, and it makes it highly economic. This is a bird's eye view or plan view of the project. The magenta areas are the permitted areas of the mine site infrastructure from the government. And you can see the layout. This is a kilometre square grids. We have 900,000 ounces in the big pit of Landia, which I've just shown you the photo of the hill there, and the vein running up it, and 400,000 ounces beneath that. And to the north, we got 2 smaller pits, another 220,000 ounces. 1.2 kilometres away from the pit, we've got a processing plant. And over the other side of the road from the processing plant, we've got a tailings storage facility where the waste goes. From the processing plant, that is. We've got waste dumps to the north where unmineralized rock goes. This slide is highlighting a peer group comparison of open pits out there of a similar size and the grade. And what it's showing you on the left is that Condor's got one of the highest grade products. We measure gold, as you know, in grams per ton. So a gram is $60. So $180 ton rock is what you're seeing. And it costs $60 to turn that into a bar of gold, or just under about 55. And we got low all-in sustaining cash costs. This is going to be highly economic. We purchased the mill early this year. And by way of a sort of reminder update to new investors, we paid 6.5 million. This is the 24-foot diameter, 17.5-foot long mill. So it's a middle part of a processing plant. And it's a brand new mill from being made in Finland by Metso Outotec, who are the world's leaders on Mercedes, Rolls-Royce of the mill market in our business. We bought it off a company called First Majestic Silver, that's a $4 billion Canadian company, who cancelled the order. And so they accepted part payment in shares at 50p, which is a great vote of confidence in us as a company. They think we're very undervalued and are happy to accept Condor's paper. And the balance of 3.5 million, we paid $3 million. So we only have, we're 90% paid for this. It's all being shipped. The first shipments have arrived in Nicaragua and also cleared customs. So the size I mentioned earlier is 2,300 tons a day, but if we use a bigger motor, we can put it up to 2,800 tons a day. And these are the mill drawings. People say, have you done an FS study on the SAG mill itself? Well, it's more than that. It's designed, it's shipped, and parts of it already arriving in the country. We expect the balance to arrive in the next couple of months. This is the mill feed. So once you've got a resource, you then do mining studies around that mineral resource to see what you can actually bring out economically to the processing plant. And this is saying the total permitted production is 8.5 million tons could be delivered. So for example, that could be 1 million tons a year or 8.5 years at 3 grams for 850,000 ounces of gold. That excludes our underground, which we think could buff up production by another 50, or increase production by another 50,000 ounces of gold a year. We're doing a high-grade mining scenario, which is why we're doing quite a lot of drilling at the moment. This is because we want to show a quick payback on the project. And this is, in summary, we can high-grade the main Landia pit, which I have a slide on later, and we can get 50% higher grade, we estimate, at 1.6 million tons at 4.6 grams, and that's got about 225,000 ounce production out of it. Taking the mill we've just purchased at 2,300 tons a day, if we put 4-gram material through that, we produce 94,000 ounces of gold a year. If we put the bigger motor in, we produce 117,000 ounces on the mill we've already got coming into the country. This is a photo of the starter pits at Landia. We've completed 3,500 meters of drilling. The starter pits are over to the left and to the right of that photo. This is a Google Earth map. So there are 2 starter pits, and in the middle you'll see a couple of green holes. Those were RC drilling holes, and we thought that was a low-grade zone, not much in it. And we put out an announcement this morning saying that actually we've got an intercept of 54 meters of gold at 2 grams or 1.98 grams, so $120 a ton rock, which we didn't think was there. And within the middle of that, there's 5.2 meters at 17 grams, so super high grade. So it's likely, the significance of today's announcement is that whole zone will probably join up. We have to do the studies. We'll probably join up, and this is within 35 meters of the surface. So what we're seeing on the left of that photo is 445,000 tons at 4.2 grams, and it can produce 54,000 ounces of gold within 35 meters of the surface. Using $1,700 gold, that's about $92 million of gold sales or $60 million of operating profit, pre-sustaining capital and pre-tax, obviously. But that's all very shallow and will give a quick payback on the processing plant. We've had some great other intercepts you can see below here, 21 meters at 6.5 grams from 15 meters drill down. Moving on, we're doing the same at Mestiza, the high-grade pit of 120,000 ounces at 8.7 grams to the north. We're putting in 8,500 meters. As of 2 days ago, we've completed 3,200 meters of drilling. And similarly, this is 500,000 tons, and that for us could be 6 months worth of production using the mill we've purchased. So in 6 months, if we put that mill feed through in that period, we'd have we produce 86,000 ounces of gold or 146 million of revenue and 100 million of operating profit. And this is only 10% of our permitted material. I mentioned we have 1.12 million ounces permitted. So the objective of this program, though, is to We don't have a reserve upon the Mestiza, so we're converting the inferred material to indicated, and we'll be taking up to a reserve status ready for extraction. But it's 25 meters by drill density infill drilling. We haven't got any drill results back yet, but we should get those back. Well, any time we should get the initial ones back. So apart from that drilling, and if you combine, just a quick thought there, if you combine those two pits, you can quickly see we have $230 million of revenue and $160 million of operating profit, possibly mined within 12 months. That's how financially attractive this will be. So we're clearing the site. I've shown you a photo of the haul road. In fact, if you look up from the main road, I don't know if you can see my mouse, this is 700 meters long here, the access road to the plant. That's all being cleared at the moment, about 11 hectares. We should have out, we're going to update our scoping study, or in Canada, a preliminary economic assessment. We last did this 6.5 years ago at $1,250 gold price. We want to remind investors that what we've got here and the significant changes we've made in the last 6.5 years. So we'll put two scenarios out of all open pit scenarios from 4 open pits that we've actually got, and then we'll layer in the underground to show the maximum of the project as to what we could do. Now we'll also, but that'll probably be quite a big mill, near 4,000 tons a day, maybe bigger, 4,500 tons a day. We'll also are very advanced on a feasibility study, so a bankable feasibility study, effectively on for bank debt financing on the whole project. So I'm expecting, if I run through 12 studies, which I've listed there, I'm expecting the processing plant designs, which we've awarded to Hanlon Engineering and GR Engineering Services Australia, that to be completed by the end of August, with me, provisional numbers with me actually earlier than that. The tailings storage facility, I had a call today with Tierra Group in Denver, it's 90% complete, as are the water retention dams, and that will be completed next month. Metallurgy tests are in the labs at the moment, so we just got to wait for that another 4 weeks for the test to be completed, and then it's 3 weeks to write a report to FS level. We got hydrology, SRK Cardiff are on top of that, and hydrogeology, we are doing some further pump tests this week. The mine and waste dump schedules, I've had another call with SRK for an hour or more today going through the schedules. Actually, firstly for the PEA schedules, and then we'll work on the FS later. And everything else is sort of seriously advanced. Geotechnical drilling, we've completed 800 meters of 1,700 meters. So I'm optimistic that this we're progressing this at a pretty good pace. The second part of the strategy is to expand the resource, to add another 1 million or 2 million ounces, and this can be just drill down the ore shoots and we add another 900,000 ounces. And here's an example of the southern ore shoot at the southern of Landia open pit, the hill that you saw the photo of. And you can see beneath the pit, there's 193 meters here. There's 4 intercepts, each at 10 grams. So super high grade and nice widths of over 8 meters average, with this one 16, and it's completely open. So we need to drill down there in due course. We've completed actually 3,500 meters of drilling on Cacao. We've got a small resource here of 60,000 ounces on Cacao. It's only 4 kilometers away from the permitted mine site infrastructure. We believe it's a completely preserved epithermal vein system south of this fault. We've penciled in here in red, there's a fault system, and we've got rocks that indicate to geologists that we're at the top of the boiling zone, and we think this has got a 4 kilometer strike length. So 2 weeks ago, we put out some drill results saying we've hit a true width of almost 50 meters at 4 grams, including 2.6 meters at 7 grams, beneath where we had the resource. We've now stepped out drilling, we've got intercepts, about 500 meters of strike length and additional. So we hope there's another 500,000 to 1 million ounces here. We paused the drilling to wait for a few more drill results to come back and then reassess where we put the balance of that program. But that's the second part of the strategy, to add ounces. This is just the district to show we've got where our ounces are on less than 5% of the concession package. It's a very big concession package. And in that concession package, we've got 2 major regional structural faults, which we call the Andrea corridor on the India corridor, we completed 300 square kilometers soil geochemistry. We've flown magnetic helicopter-borne magnetic surveys. So we've laid all the groundwork for the 5 million ounce plus district. So what are we doing now? I hope I've covered that, but just sort of wrap it up a bit. We've got 80 people on the project. We're completely de-risking it. We're doing all the studies ahead of construction and break. We're clearing site. We're very advanced on all the projects that are ready. In the short term, we'll buy the balance of 4% of the land. We've bought about 10 hectares in the last 6 weeks of land. So we've cracked the back of this in a material way. We've got more drill results on Cacao, 1,500 meters to come through. We haven't announced any of the 8,500 meters on the Mestiza project, and we're progressing at a good pace. Environmental and social, we've spent a huge amount of time and effort on this for our social license, over $20,000 a month, many different engagement programs. I'd encourage anyone who's interested, we do reports on our website, 40, 50-page reports, which are voluntary on the social and environmental side to take a look at. I can't do it justice here. We started a water project for $200,000 in May this year. It's drinking water for the community. So to wrap up the investment case, is to construct a mine producing 100,000 ounces as stage 1, then materially expand that with fully permitted, expand it to 150, 170. But if we find another 1 million ounces, it could be much bigger than that. So let's see what that expansion would be. But we want to get into cash flow. We want to show the 5 million ounce district play. We got strong economics and low all-in sustaining cash costs, and we're $35 an ounce in the ground. Some recent research by Hayward in securities in Canada had the average at about $85, $90 an ounce in Canada. This is our shareholder structure. Jim Mellon and myself as directors have 22% of the company, so the directors have a lot of skin in the game to maximize the shareholder value. We've got a reasonably good shareholder base. And that concludes my conversation, my talk rather.
I have got some questions for you. So I have got some questions for you. So let's get on with that. Okay. First one will be, what do you estimate the total gold reserves to be worth at current prices?
Okay. Well, the current reserve that's published is 675,000 ounces at 3 grams. And so you can do the numbers off the back of that. That would be about 1.1, 1.2 billion US dollars.
Okay. Now, in terms of the political landscape, President Ortega has an unenviable reputation that has led to an unstable government that has arrested opposition members. Has Condor Gold achieved a laissez-faire relationship with the government of Nicaragua?
Yeah, it's a good question. We're hosts in the country, which we're drilling in. They're very supportive of mining. It's number 1 export. That's not just us. There's a 4th mine that's just being commissioned in the country by Mako Mining, and they've announced commercial gold pour 2 weeks ago, and it's the biggest export. So they leave us alone. We don't get involved in politics. That's not our job. Our shareholders want us to go and build a mine and find lots of gold. We do way beyond what many people would consider as reasonable within the community, which we're very keen on maintaining that social license to operate. But obviously, as the government in any country that you're operating in mining is a stakeholder because they grant you permits. So you have to engage with the government, and we do so. And we would encourage the government to have free and fair elections. That would be my position and comment to them. But we operate where we operate with, and a bit like operating in other strong countries. I wouldn't say it's politically unstable. I'd say it's been very stable because of the nature of the Sandinista regime at the moment. So there is stability, just like there is in China. And there's no democracy in China, and a lot of people are prepared to trade with that. So I would say that we haven't reached a laissez-faire. In fact, we've taken our time getting permits. It hasn't all been easygoing, but we have a working relationship, of course.
Okay. As you firm up gold reserves towards your 5 million ounce target and your new BFS is produced, how likely do you think is that you will receive bids? Have you received any approaches, and would you consider them?
Well, we're a listed company, and quite often in our market, as in the gold exploration market, the juniors go on the frontier. The big guys do the producing of oil or gold, and when there's something interesting out there, whether you like it or not, somebody will knock on the door. Will that happen with Condor? I don't have a crystal ball. I don't know, but market sense would say as this gets increasingly de-risked, there is a chance that that would happen, but it's not for me to speculate. We're not running the company to say, oh, we want to sell it. We're running it with a mission in mind to construct and operate the mine as a stage one and show it could be much, much bigger. So that's a possibility. Are we in discussions with anybody at the moment? No. Have we received approaches? If I did, I'd probably have to announce it to the stock market in London and Toronto. So no. Would we consider it? Well, if we have a share price at 45, 50p, if someone wants to come in at a very large price, the board would have to consider it. It's not just myself.
Yeah. Will you need to issue equity to raise further working capital prior to full construction financing?
Yes.
And is there a timeline in terms of?
No, there isn't. We haven't engaged any brokers to raise us cash at the moment, but will we need to raise, as part of the upfront construction package, will we need to raise equity and debt? Yes, we will do. The FS that we're doing will give us an updated CapEx number of plus or minus 15% to an FS level, and all the engineering designs to support that. So the feasibility study which we're doing right now, the bankable feasibility study, is absolutely that, to get a new CapEx number based on the mill that we've just purchased and being delivered into the country. But we'd like to know that number. We have to have that updated number before we can go and get construction finance.
Yeah. So have you thought about going carbon neutral to unlock investment from ESG focused funds?
No.
Okay. Does Condor have a project roadmap with key milestones and indicative timescales that investors can view? Drilling completion, feasibility study, construction financing, etc.
That's a good question. We'll put that out as soon as we've got the FS out, because but very loosely, if we can put a feasibility study out by the end of the year, or round about that, and this will depend on the timing of some of the studies I've mentioned, so I don't want to give an exact date. We then get to a position where we appoint an EPCM manager. So we do an EPCM is the engineering, procurement, construction, and management. And Hanwell Engineering, who we've appointed to do the designs for this, were appointed an EPCM manager using this mill for First Majestic Silver, and they're the parent companies listed on the ASX, GR Engineering Services. So they'd be in a good position to do the EPCM for us, which de-risks the project for the shareholders of the company, because they build mines for a living. They won't be the only people. There'll be 2 or 3 other companies interested in building a mine for us on that basis. So that would de-risk it. We would then need, once we appoint that person, they will say, look at the project in detail and give us the timeline, say, well, we can build this in 12 months. So it's going to come, a lot of things will focus around, but this is a very simple project built from an engineering perspective. It's not rocket science. It's a crushing grinding equipment. We've got the main bit. We've now got to work out what the various component parts are, additional parts we have to order, which is part of the scope that we've given this engineering firm, Hanwell Engineering.